Alrighty, quick update here. Market has been in a little bit of a spill. Want to cover exactly how serious this spill is. Is there a possibility that it might open up to the downside even more? What kind of rallies are possible? Let's dive right in. Chart worth 1,000 words, so let's just take a look here. Here's the long-term trend line that we've been in for about 6 months. Market rally is going well. We are attempting to reach the upper, not the upper, but the center target of the reflection box from the entire rally. That is this here. This reflection, 50%, center of the X, 50% in time. It's been a year of falling, 6 months of rallying. We went from 20,000 to 3,000, and we went back almost to about, we'll call it 9,100 or 200 or so. Center line is priced at 11,003 or so. So conceivably, this is a very easy number to hit, 11,003, 11,004. Top of the frame here at 10,000. Let's take a quick look at that. Marine Math 10,000, Marine Math 0, Marine Math center frame at 5,000. Market is up here near the top of the frame at the 7/8 line, sometimes called the fast line. This can cause the market to drop fast, hence the fast line. This is true. So let's look a little bit closer. So obviously in an uptrend, medium-term targets include prices up here up to 11,300. The bull market itself, by definition, if you believe that we're in one, will be longer than the bear market. The bear market was 1 year. The bull market must be longer than a year. The bear market is usually much longer than the length of the bear. So if the bear was a year, the bull could be a year or 2 or 3 or more. But here we are at 6 months, so we've got lots of time. 6 months to go of needing to get higher prices. So those are the cases for the bull. The bull's pretty clear. Now, what stands in our way of higher prices? We've broken out of these downward trend channels, and we have not retested any of the particle lines down here. We don't have any structure underneath the rally, and any rally that's going to carry for an extended period of time, like the one that we're forecasting, requires a lot of structure. So we expect to see some structure. It also needs to extend and run. That's the definition of a bull market. Just when you think the averages have caught up to it, it needs to run even further. And so we expect even further running. So we expect it to hit the top of the frame. We've said this a few times. We expect it to cut through 10,000 and fairly easily the first time up. So we're looking to see a challenge here at some point soon. Even before then, we need to take out the 37.5% line. This is this gray line in the reflection box. We'll probably see this happen all in one move. When they take out this high here at 9,100, it's going to just cruise right through this 37 line. That's going to bring in a lot of buying, and the buying that thrusts the market higher from there will probably be enough to carry it through 10,000. Going through 10,000 will immediately trigger buys as well, and we'll be at 11,200 or so really pretty quickly after you take out this high. So if you are able to take out this high, you may try to jockey for position here, but don't be too cute. It'll probably be a very quick up leg, and it will probably be exhaustion time up here around this price. So we're going to highlight that Marine Math. This would be technically the Marine Math 9/8 line, or the first line in the attic. So the attic are the two lines above the frame. So 11,250 is kind of one of my favorite targets for the moment on when I will stop going long. After this point, I'm going to stop going long. I'll probably start going short. So that's our high price target. In between now and then, we have really, to me, just a series of resistance lines that should create pullbacks. So expect them there. No need to hold past these lines. If you're day trading in the moment, just sell them, let them reset a little bit, and take another shot at it going long again. You'll probably be pretty well rewarded. There will be others that sell through this, but the majority will pass through. There will be others that sell through this, but the majority will pass through. You know, trade accordingly. So between now and then, we might have a little trip. We may need a little structure. How much structure do we need? I think we probably just need green level structure. This would be this upper trend channel. I believe as long as we get through from here to here, we're looking pretty good, and then we can move higher. Now, we might move higher sooner than that, but that's really my best probability here is a lot of moving sideways for about 2 weeks. This area of space here takes us through about July the 24th. It is June 7th. That's a maximum of about 6 or maybe, yeah, about 6 weeks or so. You rarely travel all the way to the end of the channel in a bull market. You usually, you know, come up a little short. Like here, you'll see we came up a little short. We were within what we call the warning track. Let's go ahead and put the warning track up. Why not? No better time like now. So this is the warning track. Standard deviation is a little bit smaller. It is compressed. You can use standard error as well. So here we are. It's compressed. You can see that major resistance of this channel line will begin pretty darn soon. Huge confluence of resistance right above us, and then lots of space out to our right, and lots of space here in green. Could continue into red. Hardly any vectors that will make us rise until we get to the center of this red channel. We will have a tiny little vector here that's going to help us rise just a little bit, probably just enough to set some shorts. Now, if you're day trading, you may want to do this, but you know, it's risky. I don't recommend that. If you don't get your day trade exactly right, you don't feel comfortable. The trend is up, the longer term trend is up. Better to just go with that. You know, if someone bonked you on the head with a large rock and you fell asleep for a few days, you want to wake up and not worry about your trade. You want to be going with the trend. If you lost access to your trading account, you wouldn't want those last couple of days that went by to be days of agony. You'd rather them be days of reward, which might happen if you catch a crazy rally. It's a bull market. Things like that happen. So stick with the trend. I say if you're stuck and glued to your computer and you're able to just, you don't plan on getting up, you want to take some short trades, man, they are there. It will seem like an eternity sometimes for some of these bull market pullbacks to play themselves out. It could be as long as 2 weeks. Imagine that, 2 entire weeks. So it's up to you. You could take some shorts. Depends how much time commitment you have to stand in front of your computer. If you want to take the safe plays to go long. So how do we get into those long positions, or what might the shorts look like? Let's zoom in a little tighter. Here we'll see what I expect the decline could look like if it came now. And I will know that the next leg of the bull is starting if we get up above 87.50. Let's go ahead and mark that now. That is here. So we get really bullish on any break of 87.69. We begin to turn bullish actually on any break of the reflection 62.5% line up here at 84.75. So there is a major decision-making moment somewhere right about here. So we don't expect prices to get higher than here because we're really thinking it's going to short and roll over for a little dip. But if it did, and we went back to 87.50 or higher, we would be just ready to go long, and we would just try to sit there and just capture the move that we think is coming. We're going to move this. This was back when we thought something a little nicer was happening. That didn't happen. So let's go ahead and just collapse this wave down. There we go. That's really more like what the limits of our bullishness now. Boink. Boink. Not in play anymore. So here we go. So we expect some shorting opportunities to arise outside of this trend channel. A particle line was created there. You can't see it because I didn't draw it. It's in blue. There's the internal tight particle line in purple that I did draw. That's the demarcation line. It's the Murray-Math 6/8 line. And of course it is the Murray-Math 6/8 line. That is the demarcation line between extended rallies. So you got to get above this before you go higher. So obvious stuff. We get a little bit tighter. We see the shorting curtain created by the two conflicting highs. You had the flash high caused by high frequency trading, and then the volume high created here. So we map these out. They turn into a volume curtain, shorting curtain here in particular because it's planning on containing prices. And then here could be the low target. We'll worry about that when it comes. So hope that clarifies. Probably going to get a bounce. This could turn into more. Just to exemplify this, we just want to talk about how important this is. If this turned into more, this is what that would look like. It'll come up in here. It will come up here with a little thunder. Come on and test the middle of the frame. So it's got a little ways to go. Then it'll come back down and start moving sideways. That little sideways move will be a tiny little Wonder Woman, and it will move higher to the top of the frame and then cycle sideways here, go middle, and then go bonkers to continue the original parabolic move. So we're going to turn this one red. There we go. All right. Bad path, good path. The more probable path, I'm going to turn this into, this is what I used to do here, turn this into slightly thinner, less probable. If it is going to be a good path, you will be able to tell all in this region, no need to freak out. This is the wonderful part of charting. If you immediately see weakness and it's going sideways and you don't see the climb and you don't get above 877 or any of these numbers, rest assured we are going a little bit lower. Our first stop will be this moving average. And we'll take out that moving average. There'll be some buying that comes in. It'll be weak. It'll kind of move around like this, as this sort of thing will be about, oh, what do you know, about right there or so, and rolling over. We'll go ahead and just color that green. That's what that would look like. So we'll see some resistance here, but it probably won't hold. We've already tested this 37.5% reflection box. We've already tested it. We broke down below the frame twice in 2 flashes. That's not good. We did get a higher low here. We did get a higher low. So I do expect this to kind of carry just a little bit. They're going to get a little accidental assistance. We're also at the bottom of the 62.5% reflection box, but it also violated that. So it violated the box. It violated the 0.8 line. Then it came down and tested the very deepest resistance, which was the 37.5%. Now it didn't break that, thank God. Had this thing come down just a little bit lower than this, I'd be really bearish. But luckily we have a higher high here. We should get some push out of this, but I just don't think it's going to be enough. We're going to run into all this resistance. Here it'll be choppy, but it's going to give you plenty of time to figure it out. Are you above or below 8442? This is the number to watch, right about here. 8440, 8442. If you see prices above that, man, cover that short. If you see prices that never achieve there, hold your short. And then you can hold it all the way down here to 6,900. I know it seems like it's just ages since we had 6,900. But man, what a buying opportunity that will be. How about 6,250? Let's go ahead and just put them on here for anybody who, later on wants to say, oh, did you really think that might happen? Here's the center of the frame somewhere around here. So, there's a expectation that we could see 6,300 to 6,800. So there'll be a great buying opportunity down there if we see it. If not, we'll take this path. We'll see resistance through here. We'll have Wonder Woman kind of in effect, and then it'll take off. So hope that helps. Be back soon.